Robert Prechter warns deflationary black hole is coming in 2023 because of this. Based on the 90-year cycle, if history is any guide, we are stepping into the similar territory as 1929 to 1932, which is the Great Depression that is coming in 2023. It's scary, I know. But according to Robert Prechter, we will see a deflationary black hole coming. Just look at this chart of Dow. From the 1929 high to the 1932 low, the Dow lost almost 90%. Guess what? We are exactly 90 years from 1932 in 2022. And we've recently hit the top of the trend line in 2021. The last time we hit that trend line, it was in 1999. Then we had a dot-com bear market crash. Now we are crashing down once again in a bear market. We just had a kiss of death signal triggered on the S&P 500 and the Dow. Are we going into depression next year? I will let you know next. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back, everyone, to my Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, commodity markets. If you like any of these markets, consider subscribing. It's totally free. And of course, tap the like button if you like what you see in today's video. It's totally free to do so. This video is brought to you by my Patreon. If you are a sweet boy, go to patreon.com/magicalgoddesscheryl to support all my work. If you want to be my good boy, apply to write your first book with me, author of best-selling books, Goddess Cheryl. My good boys always obey, and they always get rewarded handsomely. Have you been a good boy? You will get the encouragement you need to be on your author journey. Based on Robert Prechter, I think he is one of the best analysts that we have, one of the best chart analysts out there. I think that he is by far one of the greatest experts on Elliott wave theory and Fibonacci. In this case, it's quite interesting what he is saying here. He said there are Fibonacci cycles and there are 20-year cycles that seem to indicate that we are heading towards a major bear market crash in the stock market and bond market this year into the low in 2023. We have a 90 years commodity cycle from 1843 low to 1933 low. That's a 90-year cycle. Thus, from 1933, add a 90, that gives us 2023. Plus, we are in a bear market as we speak. Even the oil has fallen in price and it's on its way down. So we could see it continue to fall for the rest of this year based on Robert Prechter. If the price falls past April of 2020 low, then we would see the deflationary black hole coming in the market. Maybe that's why billionaire investor Jeff Gundlach has been seizing the opportunity to buy treasuries recently. His nickname is Bond King. Draw from his success in the fixed income market. Treasuries are undergoing their worst decline since 1949. TLT has lost 33% just from the peak of 2021. No one can call a bottom. We have to go back to 2013 to get this price in TLT. All we know is if Bond King thinks it's a good time to buy bond, and he is buying, then we know we should at least hold our position and collecting those dividends. Deflation black hole will come. This has only just begun. Because 2021 is the everything peak. We have reached levels we have never seen before. It's not only the stocks are overvalued, real estate and bonds are overvalued too. Check this chart in 2021. Even the companies that are losing money, they were priced at 3 times sales, well higher Then the 2000 high of 2.36 in 2021. We had a record margin debt at $1 trillion. Right now, that is down to $500 billion, which is still higher than the peak of 2007. People are borrowing to the hilt so they can own shares of stock. We also have extreme low people's interest in holding cash. You can see back in 2009, in the middle of the chart, the ratio is 12%. That's quite a bit of cash relative to the value of stocks. We made an all-time low at 2%, so the cash related to the value of the stock is extremely historically low. We also have a record number of deals for raising capital for what, you ask? Well, they won't tell you. Raising capital for no stated purpose. There are actually companies called special purpose acquisition companies, SPACs. What they are doing is they are saying, give us your money and we will figure out later what we are going to do with it later. And people are going, what a great idea. I think I will do that. This hasn't happened since the South Sea bubble in 1720. Here is a fascinating chart. Look at the bottom there in the middle. You will see a low for this chart. That was in March 2020 bottom. This is an index of money losing tech companies, and they have gone up 5 times in value since that low. People can't get enough of them. Unbelievable. All this excitement about tech companies, of course, has increased the volume of trading on the NASDAQ versus the S&P 500. Back in the dot-com era, when they called it a mania in the NASDAQ, even then they can only generate 1.3 times the volume, while in 2021 it was 2.5 times. If you thought that was a mania, what's this? These are the kinds of headlines you are reading everywhere. This is just a snippet of some of them that came out in April of 2021. There's going to be a face ripper stock market rally. That means like you're on a roller coaster and going so fast your cheeks puff outright, except they are not talking about the downside like in a roller coaster. It's the upside. A professor tells us the bear market has just entered its 3rd inning. That means he thinks he's going to be 4th inning, a 5th, a 6th, a 7th, an 8th, a 9th, and maybe overtime. Long way to go. We are just starting. We are told to enjoy the ride. There's a super bull market. There is more room to run. Managers are incredibly bullish. The bull market is far from over. And my favorite one, it's the beginning of a multi-year boom. Never mind that the stock market's only been going up for 12 years. We're just at the beginning. Wall Street stock analysts echo the crypto bulls in seeing nothing but gains ahead. One of the most bullish firms on Wall Street just hiked its S&P 500 price. Target, of course. They are so bullish. They can't help it. Now you probably aren't old enough to remember Barron's headline in 1973 in January. And that was the high just prior to the biggest decline in stock since the 1930s. And I think we are seeing the same kind of thing again. There are only one group of people who aren't bullish and buying their heads off. And that is corporate insiders. This is the record reading you have got here on the insider sell versus buy ratio. These are corporate officers who know what their companies are worth. And they are selling their heads off at the rate of 8 sells to every buy. So you have a decision to make. You can agree with all the people like the Diamond Hands on YouTube who own SPACs, or you can go with the corporate insiders who are selling into this mania. Now you know why we are going into a depression in 2023. And my client Juliana Wood, burning in the 2020 flames. And my client Teddy Eazzy, Wicked Pussy Perfume. This one is an erotic novel. And my book, Jingle Bell Magic, Ask and It Is Given. This one is a #1 bestseller. And this one is my book. And my book, You Hold the Magical Key to Your Success by Cheryl Zhang, another one of my books. So all of these books, they help with depression, anxiety, stress. They really help with depression, anxiety, and stress. So I cannot stress this enough to you all. So order your copy today. It will make a lovely Christmas present so you can start your Christmas shopping early. And also, thank you for liking and subscribing to my channel. I appreciate it. I thank you for being a fan, and bye.